Hey traders, Raghee here, and in this recap video, we're going to cover the story of the day. My phone was pretty much lighting up with requests to comment on what's happening with crude oil. And I just kind of kept saying, look, last week I was on a show called Boom Bust that RTTV puts out there. And I was talking to the host of the show, Bert Chilton, and he's asking me about crude. And I said, there's a lot of interesting narratives around crude right now, and all of them, all roads except for one, all roads lead to higher highs, especially after the OPEC meeting. And what were those reasons? Things like the spare capacity heading down at or below 2%. Well, that might sound fairly meaningless until you think about the fact that the increased production that has been thrown about since this market was selling off. Look, we went just below 73 bucks, and then this market made an about face. If you look back on the when and the why of it, the timing coincided with OPEC starting to mention that they were open to a decrease of the production cuts, which is just a double negative for what? We're going to increase production. Maybe not above the caps that they had sent for the OPEC nations, but they're going to produce more oil, or they're at least more oil is going to hit the market. And the reason they said it was okay is reasons like Angola, Brazil, Venezuela. So they had a justification, but nonetheless, all the market hears is increase in production, and that deviates from the production cuts. And then the question starts inevitably becoming, well, how long will we see this high compliance across OPEC countries? Well, what happened? Oil fell because it became, oh, wait a minute, we might see more supply hit the market. And it was just that kind of move in response to expectations of 300,000 to 600,000 barrels. Now, it's my job to know all this stuff, right? And I think, the drama that unfolds in the markets are far better than anything on television. So, this is the kind of stuff that I read and I watch and I like to keep track of. But so you might say, well, Rog, you're just talking about macro and fundamentals? Not only. There's three ways you need to look at the market. One is look at the story, but two is the story jiving with the direction the market would go in if that's the way it was interpreting it? The interpretation of more supply should be a bearish move. So this market sold off in front of the OPEC meetings to a very nice zone of double Darvis support, right around the $64 a barrel level. Now, 64 in and of itself doesn't mean anything to me, but I do know that that's probably $10 below where the Saudis need oil to be when they hit the road for their Aramco IPO, end of this year, beginning of next year. So $64 doesn't work for the Saudis. And if it doesn't work for the Saudis, believe me, it's not generally going to work for OPEC either. So there's that. Heading down to previous support levels automatically identified by Darvis. There's that. Being above the 200 EMA, technically that's bullish. This market is also in sideways chop. So unlike an uptrend, this is more about overbought, oversold. And this is an oversold market, again, around that 64 level. And there's a lot of different strategies that we can deploy in a situation like this. We can get long crude, which is inherently risky. Because what if we actually see the Russians got their way and they wanted to have a million barrel increase? The market probably would have sold off. Instead, we're probably settling down to somewhere between 400,000 to a 600,000 barrel increase, which is what the market was more or less anticipating anyways. So that was discounted or baked into the cake. So the only way that crude oil could go was up. And that's why I've been mentioning for weeks now, build the long position, preferably with options. And this is where my futures traders here, we don't predominantly go the option route, but in situations like this, options are uniquely positioned to do two things simultaneously. Quantify your risk and limit it to whatever you paid for the option in that strategy. And two, and with a straddle strategy, by the way, you're buying one put for every two calls. You're buying three options. You're not writing premium. And the other thing is, when volatility picks up like this, options are uniquely positioned to benefit from that volatility. Rather than just basically saying we went from 66 to 67 to 68 to 69, right? In the move, options are going to take advantage of that move because it all happened in one day, and they basically accelerate in value as the market accelerates higher. And that's what those calls did. So very good day for our options trades. And by the way, where have we stopped? This is the part that I love the best. Look at this Darvis level right here. Hello. Love it. All right. So I hope this helps you kind of understand how we use the tools, how we put macro and fundamentals and technicals together, and exactly what we did preparing for weeks, not just days, for weeks in front of this OPEC meeting. Have a great weekend.